Welcome traders. In this video we're going to go over all of the ZoneTraderPro patterns that can lead to high risk trading situations. There are basically three patterns where that can occur. The first pattern is a strong trend pattern. The second is a strong trend reversal pattern. And the third is any trend or reversal pattern that occurs after an exhaustion or tick divergence trade. So the first pattern where this can occur is a strong trend. A strong trend develops when price trades through the blue counter trend zone and up to the pink strong trend support or resistance zone. That is the only definition of a strong trend. The strong trend zone is not meant to say that that is an area where price is likely to reverse from. It is only used to define what is a strong trend. After a strong trend occurs, price is normally retracing just back to the minor area of support or resistance, as you see in these two examples. This is what makes a strong trend high risk, is that as in the two examples you see, price can easily trade through the strong trend zone because you are in a strong trend. The second thing that makes these trades higher risk is that price was normally only going to retrace to the minor area of support or resistance, and then the trend is going to resume. That leaves us with a very small possibility of a reward. The next high risk pattern that we will look at is a strong trend reversal trade. In a strong trend reversal trade, that occurs when we move from a blue zone to the opposing blue zone, and thus we are changing trends when we go from a bullish to a bearish or a bearish to a bullish. Either way, that is a strong trend. In a strong trend reversal trade, price can easily trade through the opposing blue counter trend zone and also create a strong trend pattern by trading down to the pink strong trend support area. Just like in the strong trend trade, the normal retracement is just to the minor zone, again giving us a very small reward possibility. This is what is really important. Don't count on seeing the trading patterns that we are talking about here. The ZoneTraderPro software was intentionally written to not include the strong trend and the strong trend reversal pattern. These are patterns that you will need to recognize. Also, don't count on seeing this trend trade if it occurs after a tick divergence or an exhaustion pattern. Again, the software was intentionally written so that these trades do not show up. This is something you need to be prepared for. The last high risk pattern to talk about is anytime a trading pattern occurs after an exhaustion or a tick divergence pattern. It is possible that you can have either or both signals occur after an exhaustion pattern. Both an exhaustion pattern and a tick divergence pattern are indications of a trend reversal, and this is the reason why we would want to avoid those type of trades if the trend is reversing. It is possible that after a tick divergence or exhaustion pattern that a trend signal may or may not show up. The software was intentionally rewritten in March of 2018 to exclude this from happening. However, it was a very difficult implementation, and because of the complexity, it was not implemented correctly. I'm currently in the process of asking a programmer to completely rewrite the part of the program that prints the trend and reversal patterns so that this does not occur. So what is the importance of knowing these high risk patterns? Well, when we go to actually make a trade, I want to look at both the 150 tick chart and the 500 tick chart where the patterns are at. If either one of these charts shows me that there is strong trend or a high risk situation occurring, that is a trade that I want to pass on. Or if I do take that, I am taking it with the knowledge that there is additional risk involved. It is all about knowing that a certain pattern may have additional risk, and that knowledge is known beforehand before you've taken the trade. Look at the areas in red. If you were a buyer in either of these two areas, you were going to be taking a very bad losing trade. Yet there was obviously hundreds of buyers that were buying at times that ZoneTrader Pro was giving an indication that they were at extreme high risk of failure. If you don't know that there is high risk on a chart because you're not using ZoneTrader Pro, then you could be one of these buyers that ends up taking a trade that is immediately stopped out. So why do we need to know these patterns? Well, if we see them on a 150 or a 500 tick chart, we know that we are at an increased risk of failure if we take those trades, and those are trades that should probably be passed on and wait for the next perfect setup. The only time these trades are going to work is when the market is in a very strong trend. You're going to need to use your ZoneTrader Pro tools of the delta strength and the cumulative delta in order to figure this out, or to be safe, not take the trade. I want to thank you for watching this short video on high risk, and if you should have any questions as usual, please give me a call. Have a good trading day. Thanks.